It's tax time. Need to know some tax tips before you file for 2021? Stay tuned for the Fort County Real Estate Show. Welcome back to the Fort County Real Estate Show. I'm your host, Kevin Carey with Caliber Home Loans. I got Terri Almacy here with me again. Hello, say hello, Emma Terri.
Hi.
Terri is with Almacy Company, obviously CPAs, and she is a CPA, just in case you didn't figure that out. But let's talk tax tips, right? So obviously the big buzz that I hear, clients hear, is receiving of electronic payments. And what electronic payments are like Venmo, PayPal, some of those other ones that are out there. And hearing now that you may actually have to start to claim that income. So let me give you a scenario and just kind of give me how you would guide a client in this scenario. So let's say my wife and I, we go out with 6 other couples. We go out to dinner, and instead of trying to give out 4 or 5 different credit cards, so, say, here's my credit card, put the entire bill on mine, here's my Venmo information, and everyone Venmos me their portion, right? It can be anywhere from $100 to $25, whatever it may be. If I'm hearing this correctly, or maybe I don't know it, but I'm trying to understand, do I have to claim that as income now based on what I'm reading out there? Tell me how that all works, electronic payment.
So in the past, meaning through 2021, because we're through that calendar year now,
right?
Those kinds of payments did not have to be reported by the agencies that do the collecting, and that would be PayPal, Venmo, Zelle, all of those types of companies.
Yeah.
They were only required to report a 1099 for income that was transmitted electronically to a particular individual if the transactions were 20 or more and totaled $20,000 or more.
Okay.
Starting with January of 2022, there is no limit on the number of transactions. It can be as little as 1, as long as the amount is $600 or more.
Okay.
So if during the course of the year you had that scenario with friends out to dinner and it totaled $600, by the end of 21, you could receive a 1099 from PayPal or Venmo,
or
whatever you're using. So there are a couple things to know about that.
Okay.
If this is a friends and family situation, most of those programs have the ability to mark that this payment is for a friend or family member.
Okay.
So when you send the money through PayPal, or when you're asking someone to pay you through PayPal, you want to tell them, mark this as friends and family, because you're not in the business of receiving payments this way.
Okay.
If they forget, or if that doesn't happen, and I'll tell you another scenario, is somebody who has a yard sale.
Okay.
And people come, and these days a lot of people don't carry cash. They come to your yard sale, they want to buy some things and they have no cash. And so you say, okay, you can Venmo the money to me. Right. So they do that, and maybe they don't remember to check friends and family because they don't really know you. They're not thinking of you as a friend. Right. So they just send the money. If that added up, you could receive a 1099 at the end of the year. Now, it's important to know that that doesn't mean you have to pay tax on it, but you do have to report that on your tax return. Because whenever you receive a 1099 for anything, interest income, your W-2, those things get reported to the IRS. Right. The IRS computers run a matching scenario, and they match your social security number, your tax return, to all the 1099s out there that match your social security number. Okay. So you will get a notice if you don't report it. But what you need to do in this case is report it, and then have another line where you say this was not income, and take it off, effectively negating the amount of the transaction.
Because it's not really for business purposes, right?
Correct.
Okay. I'm going to throw a scenario out here to you that we didn't talk about because I just kind of thought about it. So let's say I buy a couch, right? I go to, and I use my credit card to buy the couch. All of a sudden I get it home, it's not the right color, it's not the right size, whatever it may be, and I go to Facebook, right? Or marketing, or put it on some sort of social media going, hey, I'm selling this couch, I bought it for $1,500, it doesn't work, I'm selling it for $1,000, right? Because you just want to get some sort of money back because they won't take it back as a return. Someone Venmos me $1,000, they don't put the friends and family thing on there. So you're telling me, if I'm understanding correctly, is I can just explain that away as a one-off, not as I don't have a business where I buy and sell furniture. So I should be able to explain that off where it should not hit me as a taxable income. Is that correct?
That's correct. You should be able to.
Right.
It's not clear yet how that is going to transpire on the tax return.
Okay.
So I would definitely say if you have that situation, talk to somebody who knows how to prepare a tax return.
Okay.
So that you get it handled properly.
Right.
I am hopeful that something will be in place other than just some miscellaneous line to subtract it back out and say this was not business income.
Okay. So if I'm filing 2021 returns right now, do I need to worry about any of this, or is this really stuff that's kicking in for when I do my taxes a year from now for 2022?
This is for 2022 and
okay.
forward.
Good. All right, thank goodness. I get that question a lot, and I'm like, I don't know. So that's why we got Terry, the expert, on here. So, all right, let's talk a little bit about, tax plans kind of change or tweak from year to year. Are there any other little things that people may need to know, or maybe things that have just stayed consistent for year to year as they're getting ready to file for 2021?
Sure. So one of the nice things that came out of COVID, if you can look at a positive side, is that for tax year 21 and 22, business meals are 100% deductible. So if you own your own business, you can deduct meals that have a business purpose.
Right.
So that's not just going out to lunch because you're at work today.
Right.
That's going to lunch with someone that you're conducting business with.
Right.
And I have to explain that a lot.
Well, wait a minute, my coworker is in business?
No, that's not business.
Okay.
You can't be, you're not talking about office enough to make it business. It has to be someone that you intend to do business with, or you're trying to do business with them in some way.
Okay.
So a true business purpose. I suggest making notes about that.
Right.
I find the easiest thing for me is to just jot notes on my calendar where I keep my appointments. If it's a lunch meeting, I'll know who it was that I sat with and what it was about.
Okay, perfect.
So that's one way to do that.
Well, look, we try to keep these videos really short. So I'm sure there's a bunch of other tax tips. We're not going to get into all that because we could be here for hours, and she's a busy lady, CPA, tax time. So we're going to keep that real short. But if you have questions for Terri, her information is in the description below. You can reach out to her, just let her know the 4 County Real Estate Show is where you found her, things of that nature. So, Terri, thanks a lot for being here.
Thank you, Kevin.
All right. If you like what you heard, hit the subscribe button down below, and we'll see you the next time on the 4 County Real Estate Show. Have a great day.
Bye.
Bye-bye.